You see these gold bars here? There are more than 50 tons of gold that belong to Austria and are being kept in a vault in England. Such a huge value needs very high protection, which is expensive. However, as there were security and auditing flaws, Austria determined that this gold be moved to another vault in Switzerland. Now, the small detail is that despite this determination being from 2015, until today the gold has not been moved. Why does it take 7 years to move gold bars? Well, it is very complicated. It is very expensive to transport 50 tons of gold internationally. It's a little bit of a ridiculous situation, don't you think? Imagine waiting over 7 years just to make a transfer. And on the other hand, all that value could be moved safely and quickly using Bitcoin. Money Arata. A new monetary order is emerging. Increasingly, the international community realizes that relying on the US dollar as the world's reserve currency is an increasing risk. This slow and gradual change has already begun to happen, but before it, a great question arises. What commodity will replace the dollar as the center of the new world monetary order? Until recently, the most obvious answer was that gold would win. Gold was the standard before the dollar before World War II. If the dollar loses its position of global reserve, would another fiat currency, like the euro or the yuan, take over? Or would a commodity, like gold, take on the role of the unit of account? To answer, first you need to ask yourself, is gold good enough to serve as money? I know that many gold bugs have been following here our series Money Arata, which, by the way, has already 30 episodes. And the reason is that throughout this series we have been revealing all the various problems of fiat money, fiduciary money, money that is created by the governments, created out of thin air by the central banks around the world, rather irresponsibly. The problem with fiat money is the inflationary effect that happens in the dilution of our savings. That is why nowadays everyone needs to be following investment tips, as we saw in episode number 28 of the Money Arata series, because see, if you just keep your money in your savings account, in addition to not earning, not having any yield, it also loses purchasing power over the years because of inflation. Cash is trash, as Ray Dalio has famously said in the past. And gold bugs understand these fiat money problems, and so they really like the ideas of the Austrian School of Economics. Gold does serve to protect yourself from various fiat money problems. Gold has the qualities that are necessary to serve as money. It is scarce, difficult to produce, without central authority, universally accepted, and it retains long-term value. That is why it is easy to understand when people point to gold as the most likely to completely or partially replace the dollar in this new world monetary order. But things are not that simple. In many ways, in a context of today's economy, gold is trash when it comes to the need to quickly and easily make transfers, especially when compared to the digital gold that is Bitcoin. Take note, this is not financial service. Read the full disclaimer before proceeding. Gold does not have the necessary characteristics to serve as money in the modern economy. Whenever gold is talked about as money, experts list classic features that were needed in small, rudimentary economies. Now, the problem is that these characteristics are not enough for a fast digital economy. For example, imagine that your country is going to import oil from Saudi Arabia. It is going to pay with gold coins or gold bars. Just think about it for a moment. How is Saudi Arabia going to check if all that gold is legitimate? Or maybe there is some less valuable metal in the middle of all that gold. Much of the gold that circulates on the market is mixed with cheap metals like tungsten, and it is difficult for anyone to tell what is pure gold and what is not. There are a lot of replica coins that are fake gold eagle or maple leaf coins circulating that are basically gold plated tungsten. If you visit specialized gold coin collector websites, they will show you they have some portable devices you can put in your backpack and you can take with you to the exchange house whenever you want to buy a gold coin. So you can do that before closing the transaction and you can verify the authenticity of that gold. Now, the thing is that these handheld devices are not good for testing large gold bars. While it is relatively easy to validate the authenticity of gold coins with these devices, it is much more difficult, more expensive to validate gold bars. The only 100% reliable method is just to basically melt it all down and then form new gold bars. But let's assume that this validation is possible at a non-prohibitive cost. Let's assume that the market gets rid of tungsten and trades only pure gold. In that case, how will your country take that gold to pay Saudi Arabia? Are you going to put all those gold bars on a plane or a ship and then physically take them there? What will happen if, what if something happens during the transport? If that ship gets looted or if the plane crashes? To prevent a huge loss, then you need to spend a lot of money on insurance, and that will make the transaction more expensive. And before all that, how will your country have managed to accumulate those gold reserves? There needs to be confidence in the quality and the purity of gold. And if gold is really a substitute for the dollar, whomever has gold will not want to sell it easily. Anyone who gets a seller will need to buy a large quantity to get a reasonable price. And if we go down from the level of international trade to day-to-day business transactions, things only get worse. Try to bring an authentic gold coin with you to make a purchase, whether it is, I don't know, you're doing some grocery shopping, or even if you're buying a home. Try to do it paying directly with gold. Nowadays, you will probably find it easier to buy your groceries with Bitcoin than with gold. There are more and more ways to pay for your groceries using the Lightning Network, or even buy houses using on-chain Bitcoin at some specialized real estate companies than trying to do that with gold. Remember that there are costs for you to guarantee the minimum security to store and also to transport your gold. Because of all of that, to avoid the risks of custody, of transporting, storing gold, it is possible to use certificates. So basically, instead of using physical gold in coins, in bars, you could use bonds. You could use pieces of paper that will declare that the holder of that paper is the actual owner of gold that is safely stored somewhere else. That is, instead of moving the actual gold, you just move a gold voucher. Does it sound good? Not really. Because despite lowering the custody risk, now you have counterparty risk. If the person who is supposed to have your gold in custody defaults on you, now your paper might be worthless. Gold would have to be centralized at a certain point, like a central bank, which would issue gold equivalent bonds for people to be using that on a day-to-day basis. Certificates. With that, the central point would be that the excessive power to be able to control the gold in circulation, and that just goes back to the same problems that we have with fiat currency. That's the problem of turning to an old physical solution like gold for a modern, digital, fast economy. The entire payment system will have to be tweaked in order to be able to use gold as a reserve and also have different types of representations of that gold in the form of paper, gold-backed banknotes. It is not a simple thing to do. And even if it is done now, we're going now back to a system where there will be a central authority controlling the gold. Luckily, we don't have to do any of that. We already have Bitcoin, which is digital gold, hard money that is also scarce, difficult to produce, with no central authority, and which retains value over time, with the advantage of being a fully digital money, infinitely divisible, and with a transfer system that works all over the planet. Bitcoin has all the good features of gold, but without the major downsides. Bitcoin was programmed to be as scarce as gold. In fact, Bitcoin is even scarcer than gold, as it is an absolute scarcity that is guaranteed by mathematics. Bitcoin is programmed to have less than 21 million units in circulation, and that cannot be changed. Now, gold, on the other hand, can always be extracted more, depending on how much humans are willing to be digging or the feasibility of more daring, audacious projects such as mining gold on asteroids. In addition to all of that, recently, Uganda has announced the discovery of over 31,000 tons of gold. And if this is true, this could easily devalue the market. Another feature of gold that Bitcoin adopted was that of mining difficulty. In the beginning, it was easy to find gold. Nuggets were on the surface, in rivers, or just a few meters above the ground. Now, after the first batch of easier gold was mined, the difficulty increased. The miners had to build mines to look deeper. Each time gold is removed from the earth, it becomes more difficult to be finding more, to mine more. However, with an increase in the total supply of gold between 1% to 2% per year, we can say that in about 50 years, the total amount that we have of gold mined will double. With Bitcoin, it is different. The increase in total supply decreases over time. Today, we have already mined 90% of the absolute totals of Bitcoins. The first units were easier to mine. Even somebody with a home computer could be mining Bitcoin. Today, only specialized machines can do this, as the difficulty is adjusted according to the number of people involved in the mining process. We explain all of that in detail in the episode number 22 of the Mining Arata series. In the same way that gold doesn't have a central authority controlling issuance, Bitcoin is also a network without a central point, with no one who can determine how much Bitcoin will be issued. The difference is that physical gold would need to be centralized at a certain point because of all the storage, all the transportation difficulties. That would give excessive power to whomever centralized the gold. And that problem does not happen with Bitcoin. The characteristics of scarcity, difficulty of issuance, and the absence of central authority ensure that both gold and Bitcoin will preserve their value over time as long as demand continues. So far, both have the same advantages to replace the dollar as the center of the new world monetary order, even if only partially, because both are scarce, difficult to produce, and in principle without a controlling central authority. But Bitcoin has at least 4 extra advantages that are better suited to serve as a money in a modern global digital economy. There are 4 major advantages of Bitcoin over gold, and there is one advantage of gold over Bitcoin. The first advantage of Bitcoin over gold, of course, is that Bitcoin is completely digital. Instead of taking more than 7 years to transport 50 tons of gold between England and Switzerland, you could be transporting the equivalent amount, the same value, in just a few minutes using Bitcoin without having to worry about safes, armed guards, transport, ships, planes, or even insurance, which greatly reduces your transaction costs. The second advantage of Bitcoin is that it is extremely divisible. Each Bitcoin can be divided into up to 100 million pieces, called Satoshis. If need be, this divisibility can be increased even more in the future to handle smaller units. The third advantage is that Bitcoin is verifiable. If you are operating on the Bitcoin network, you can be sure that a Bitcoin is a Bitcoin. There is no Bitcoin mixed with tungsten or other cryptocurrencies. The Bitcoin network is completely secure. and it has the biggest computing power on the planet dedicated to it. With Bitcoin, there is not all that cost to make sure that gold is really gold or doesn't have tungsten or anything else mixed with it. The fourth and final advantage is that Bitcoin is democratic. See, depending on the city where you live, you will not find a reliable point selling gold. You need to have the right contacts. If gold is an elite asset, Bitcoin is the opposite. Just an internet connection, and anyone on the planet can access it to buy Bitcoin. You don't need to open an account with anybody or present documents or prove that you have money. You just create a wallet and then you buy it. On the other hand, there is a feature that is in favor of gold, which is the time that gold has played in our human history. For thousands of years, humanity valued gold. Therefore, our cultural perception towards gold is very strong. Some people call it the Lindy Effect. The expectation of something lasting is proportional to its age. As gold has lasted for thousands of years, as an idea that it is something valuable, it is normal that we will continue to believe to remain so for a long time. Bitcoin has only a few years of recognition, and so despite being superior to other cryptocurrencies, people can argue it's still inferior to gold. But what is the practical consequence of all of that? Does this mean that Bitcoin will be chosen as a replacement for the dollar instead of gold? It is not possible to make this type of prediction. Nobody has the power to predict the future. In the short term, there is even a tendency for the dollar to strengthen. We have already seen this in the episode number 20 of the Money Arata series. However, the long term depends on several factors. On the one hand, fiat currencies have intrinsic problems, such as the dilution through the increased monetary base, and also the centralization of power. Gold, on the other hand, has greater protection against this type of dilution because it has a high stock to flow, as we saw in the episode number 9 of the Money Arata series. But gold cannot evolve as a technology, it is just a metal. And a heavy one, by the way, and it requires a high cost of storage, transport, and verification. Furthermore, even with only a 1 to 2% increase in annual supply, that means it will likely double in quantity in the planet in the access that we have to it in 50 years. Or there may be even a greater increase in the case, of asteroid mining, or the discovery of new unexpected sources like the one in Uganda or some new mining techniques. Bitcoin, on the other hand, has the mathematical guarantee of never having more than 21 million units. Now we can just wait for the next few years to strengthen the Lindy Effect. This means that if you know how to use Bitcoin today, before all that change happens, you can see your equity, your money multiply, increase multiple times. In addition to enrichment, you also become sovereign and you gain freedom. This all requires study, and that is why you can get to know the Diamond Hands training to carry out practical activities together. A new world monetary order is emerging, but no one really knows which goods, which commodities will fully or partially replace the US dollar as the new global reserve currency. The most obvious answer is gold, but for a digital and globalized economy like ours, gold is often simply no good. Bitcoin would be a superior alternative as it has all the advantages of gold and no disadvantages, other than the Lindy Effect, which is culturally perceived and changing with the new generation. If that happens, Bitcoin will appreciate a lot. Those who have Bitcoin today can see their net worth grow exponentially if this scenario comes true. You can take advantage of this opportunity yourself as long as you have the necessary knowledge to be using Bitcoin. So for those of you who are interested in having this kind of knowledge, now I invite you to take a special class of the Diamond Hands course. It will show you everything you need to know how to use Bitcoin. You can go to the special class by visiting arata.se/diamondhands.